Hey everyone, wherever you are, hope you're having a wonderful week so far. We're here with the latest episode of the Inside Crypto Show, interviews and discussions with regular people just like yourselves. Today we are back with Charlie Morris, who's the Chief Investment Officer for ByteTree Asset Management. If you've never listened to the first podcast, you should definitely go and listen to that after you listen to this one. Go back. This was in about January or so. The link to the first podcast will be in the show notes on the YouTube video as well. So you can go check that out if you want to learn more about Charlie's background. Today, we're just going to get straight into matters. It's been quite a few months, 4 months, almost 5 months since the first podcast. Gold, Bitcoin, macro has changed a fair bit depending who you talk to. Charlie just released a great article as well, which will also be down in the show notes, which is entitled Clever and Lazy People Win, which was like a really cool, really short read as well. If you're like somebody who has really poor attention span, it covers some really cool points. We're going to talk about all of this today. Charlie, welcome. How are things going?
It's going well, thanks, Brian. Here in the UK, the sun's out. We've had a long winter this year, a long, wet, muddy winter. And the last couple of weeks, the sun's been out and the countryside looks fantastic. Their summer greens are coming back and with plants are flowering. So everyone's happy.
Nice. I know our colleague Julia is in, I think, for the ETF Unwrapped in the UK. And she was saying, oh my God, London weather is so much better than Zurich weather. That's a good thing.
Well, Zurich, I've been 2 or 3 times in the last couple of months to Zurich and it's always been raining.
Oh no, that's like London weather in Zurich. So Charlie, tell us about this article. Where did the inspiration come from? Tell us about, people might say clever and lazy people win. That doesn't make sense, right? How can you be clever and lazy? And it's like an oxymoron.
It's a quote that comes from a German general and big German aristocrat. And he was very much anti-Nazi. And he had a famous quote about officers. And he basically said, there are 4 types of officers. There were the clever ones, they were the diligent ones, the lazy ones, and the stupid ones. And normally 2 of these ideas come together. So you can become clever and diligent. And those are the people you want in senior management. Yeah. But then you have clever and lazy. And that's the guy you want to be in charge of the senior management. And then he said there are stupid and lazy, which is just most people in the organization who just need to be kicked to do any work. And then there are diligent and stupid. And these are the most dangerous people of all, because these people make really bad decisions and destroy any organization. So the idea of clever and lazy is a bit of a joke that clever and lazy people find efficient ways of doing things. So if you have clever and lazy people, they're more likely to write a computer program to do a boring job than do it themselves. And so there's a sort of joke going on here, right? It's not lazy, someone sitting there doing nothing. It's people who are hyper efficient because they can't bear the thought of doing a horrible job. And they find, better ways of doing things. And so Bitcoin and gold, how's it relevant to this quote of clever and lazy? Basically, there are 2 really important things in the world of investment. One is technology and the other one is commodities. We need both of these things. One's the real world, one's the virtual world. And it just so happens that basically Bitcoin has been every single theme in tech in the last few years. Yeah, every single theme. Now, maybe not AI this week. All of the other stuff, cloud computing, all of these things, Bitcoin's been ahead of the game. And Bitcoin's been ahead of altcoins as well. Obviously, also it wouldn't be number 1 still. And then the same thing true to gold and commodities. Gold's beaten oil, it's beaten copper, it's beaten uranium, beaten food prices. All of these things that we keep being told are going to go grind higher and higher. Gold's always at the front and with less volatility. So Bitcoin, least volatile crypto, excluding stablecoins, and best performing. Gold, least volatile commodity and best performing. And in both cases, the most liquid asset in the asset class. So let's put these things together. Clever and lazy idea.
Oh, got it. I was trying to think about this before the podcast today. I'm like, oh, now that makes sense. Clever and lazy idea. In the article, you meant now's the time to hide in gold. I mean, what do you think that is?
Gold's had a bit of a run in the last year or so. And so I don't think gold's going to skyrocket anytime soon, particularly in dollars, because the dollar's going up again. So I do think that we've had the best for the time in gold. But if you take a 1+ year view, it's a dead cert. Because what they've done is they've put the interest rates up too high. The inflation's coming down. That means real interest rates are pretty high right now. But that causes problems. We've seen banks fail. We've seen the British government come down last October because of what happened in the bond market. That same thing's happening again now. Temporarily, that puts a bit of pressure on the gold price, but the policy response will surely be in the next 6-12 months much lower interest rates and probably the inflation resurging. I would always say that gold or Bitcoin, the answer to my mind is both. It's rarely going to be both at the same time. It's probably one of them's going to win. So in the risk on environment, we think it's going to be Bitcoin. In the risk off environment, it's going to be gold. So I think that you've got to assume that the economy is slowing down, particularly the Chinese economy. And that's been a very disappointing reopening. And gold is that ancient safe haven. But as soon as we have better times, then you just know that Bitcoin's going to lead the market higher. That's what it does.
That's true. Funny enough, you talk about inflation. I know my brother just sent me like a little bit of a WhatsApp message. And I think in the WhatsApp message, it's explaining sort of inflation in the UK. And it shows granulated sugar up 47% in the last 12 months, cheddar cheese 39%, eggs, milk 37%. Do you think inflation's going to come down in the UK at any point in the future?
Yeah, it will do. Farmers have been complaining about the price of milk for years. They weren't making a profit. So these are long overdue, these price changes. Some of it's also to do with the disruption of leaving the EU. But I think that's hard to blame because it was something that happened quite a few years ago now. So most of those adjustments should really have taken place. I think we've got a lot of public sector pay rises, which are very high. Nurses, doctors, these sorts of people. Everyone wants a big pay rise. And they seem to be getting one. But I think this is not just here, this is everywhere, particularly in Europe. And what we're seeing is government deficits expanding. So officially, we're still in the upcycle, right? We're not officially in a recession yet. And so tax receipts from the people should be high. But we're already seeing in America, in France, in Germany, in Britain, even in China, we are seeing government deficits expanding again. And we're not even in the down cycle yet. So I think that governments are in real trouble because they're just writing checks they can't cash. And that just comes back to alternative assets, gold and Bitcoin, no one else's liabilities. How many bonds can these governments keep on issuing? How many is too many? If you keep issuing bonds, surely bond yields rise, what we're seeing right now. Yeah. Gold doesn't like that in the short term. But I think that if it's telling you, if it's rising because the economy is strong, that's fine. That's bad for gold, but that's very unlikely. If they're rising because inflation actually is more structural, that's good for gold. And if they're rising because investors think actually there are just too many bonds in the world and they'll never pay them back, and there's a credit risk element, that's also good for gold. So I think it's hard to say that bond yields rising, it's because the world's going gangbusters on growth that you can't be true. So we're probably seeing a structural change from the last 10 years where the cost of everything, the price of milk, the price of eggs has been too low, and government finances are now structurally in trouble.
That's true. And this side of the world, we hear all about non-mainstream provinces like Beijing, right, or Guangdong, but like the smaller provinces in China. Oh my God, we're out of money. Hey, government, can you give us some money because we can't afford to pay for health insurance services or that sort of stuff across there in China as well. So I know one of the really interesting points you made is that the Chinese buying of gold is slowing down, which is why gold, I think, slipped below the $2,000 level. Is that something you expect in the long term while we sort of rebalance between like government deficits and bonds and that sort of stuff? I know in the cool article, I never realized you made that prediction of, I think, $7,000 gold or $70,000 gold.
Yeah.
It's $7,000 gold. So is this like restructuring like in the medium term?
For 2030, by 2030.
By
So
2030.
I wrote the article for the LBMA, which is the regulatory body for the gold market. And I wrote that in 2020, and it's by the year 2030. I think that it's really based on one simple idea that the Fed is saying 2% inflation target. And the article is based on the idea that more towards 4%. If that happens, if the long-term expectation for inflation creeps up to 4%, then a couple of other things need to happen as well. Rates need to stay lower than you think, and there needs to be some actual inflation baked in, and maybe a bit of a premium in the market. You put those together and you get $7,000 gold. So it's basically this idea that we break away from the 2% inflation target and end up looking more like 4%.
That makes sense. Another thing as well is I remember when we initially had our first conversation, you talked about the history of gold, the history of Bitcoin as well. And it's been a few months. And I think one of the most interesting things is like a lot of the stuff you talked about in the first podcast is like, yeah, this gold or Bitcoin and gold, right, makes sense in this sort of macroeconomic environment for simple people like me. We still have uncertainty where I live in the world about China, about Taiwan, about whatever's going to happen this side of the world, right? As much as people here don't believe it's going to happen, we still always read stories in the BBC and CNN and Sky News and you name it. They're talking about this story as well. So do you think there's an even stronger case, like bank runs in the US as well as another thing, right? Like for this sort of combination now almost halfway through the year of 2023?
Yeah, let's not forget that these are alternative assets. And some people say, I don't like alternative assets because they don't pay a yield. That's the point. You're trying to get away from the money system. And these are the two most liquid alternative assets that I mentioned earlier. And there are lots of alternative assets, grand pianos, fine art, fine wines, all the collectible things, which go crazy every now and then, baseball cards, whatever. But these are two deep markets, and they offer you something completely different from a 60-40 balanced portfolio, which is highly sensitive to the debt crisis that we have been in for years and is going to get worse. And also equity prices and real estate prices, and all of these things are linked to the cost of money. And so if we are in this world where rates just keep on going up, it puts downward pressure on asset prices generally. It's tough. And so we just say, how can we have an alternative? How can we do something that's protected from the system? And that really is the beauty of Bitcoin and gold. And I think that a lot of people say, okay, fine, I get your argument. We should have some Bitcoin and gold. Of course you should. Everyone should. Doesn't have to be a huge amount, but you should if you're making rational decisions about a diversified portfolio. But what we're saying is that the concept of bold is also extremely important because you've got to put these two assets together on a risk-adjusted basis. And so the idea is that in our basket, we think that it should be roughly 80-20, 80% in gold, 20% in Bitcoin. And the reason for that is the risk is about the same. So if you've got $80 in gold and $20 in Bitcoin, your chance of losing $5 in either is about the same. So that ratio is quite important. Yeah. And the way we get to that is by looking at the volatility of each asset. And over time, I would expect gold's low volatility to remain low, but I would expect Bitcoin's high volatility to keep on coming down slowly over time as it matures as an asset. Indeed, it's now, for the last 12 months, it's 47% for the whole of the last 12 months. And that included a bear market year. So that includes Terra Luna and these kind of things. So 47% is below a typical airline or a bank or a steel company or an oil exploration company, something like that. So actually, when people talk about Bitcoin being volatile, they're a bit out of date. It was really volatile. That volatility is coming down. And as it comes down, the bold basket sees more exposure to Bitcoin and slightly less exposure to gold. Will it ever get to 50-50? I doubt it, not in my lifetime. But I think I can easily see the basket shifting towards 70-30. And in fact, we're not that far off seeing it 75-25. But so the bold concept's really important because you put these two together and it's just constantly balancing each month just to keep your risk managed. Whereas if you just go and buy gold and Bitcoin, you're not doing that. You're not getting the benefit of the rebalancing. So we reckon that every year, the excess return is about 5 to 7%, because what we're doing is selling one asset high at the end of each month and buying the other one low. And we keep doing that. And because they tend to work against each other, these two assets, because they've got low correlation, you end up adding value. So the bulk concept is a really strong concept, and it's tick the box, liquid asset, liquid alternative asset, done, managed by this index strategy. And so bold, what has it done the last few years? 20% a year, basically. And this year, bold is up 17.5% in dollars. And if you didn't do the rebalancing, then you would knock 5 to 7% off. So your 20 a year would look more 13, 15.
That's impressive. Going back to the old podcast as well, I remember Bowl's changed quite a bit, and I've seen the internal data because he always posted. But for people who are listening to this podcast, who listen to the first one, like, how has Bold changed in the last 5 months?
The weight in Bitcoin has gone up slightly. So when I say 80-20, that's a number to take away and think. But specifically, in the last rebalance, it was 22 Bitcoin and 78 gold. And the next rebalance, I'll be able to announce in a couple of days' time.
Fantastic. You've talked about this concept, Bitcoin outperforming. It's one of the questions we haven't really talked about. And there's a cool graph where we explain all the different indices, right, inside the article that's referenced for today's show. I wanted to ask you, like, why has Bitcoin performed better than these indices? Everyone to meet in the last few months, and you've referenced AI in your article as well as AI, NVIDIA, blah, 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 blah. Oh my God, tech is doing so well, Apple, Microsoft, etc. But even with that, we still see Bitcoin doing better as referenced in the article.
Yeah. And don't forget, this is with the authorities and regulators doing their utmost to make life difficult for crypto. So I think that is a really strong idea. What's the price of Bitcoin over the last couple of years when it was at 68,000? What's it now? If you read the newspapers, you say $1. Bitcoin must be $1, having read the newspapers and listened to the regulators. But no, it's $26,000. So it's actually, the bear market's clearly over. The low was late last year, and it's going to consolidate. And we've got halving in 11 months time, less now, 10 and a half months time. And that's a draw. And the new supply of Bitcoin comes down from just below 2% to just below 1%. The world's running out of Bitcoin. And in 5 years' time, we will have mined 97% of all Bitcoins. If Bitcoin can be taken seriously in the long run, which I believe it will be, then the squeeze is on. The next few years, it really does join the mainstream. And then as the authorities realize the errors of their ways, they realize that this is not a Ponzi scheme, it's real, and they're in the way of the future. And crypto has an integral role within AI, because AI is when computers talk to computers and help us and all the rest of it. And they need to exchange value to cooperate with each other. If my organization has some data or whatever, and your organization has some data, and we want to be clever and lazy. You and I want to go to the beach and have cocktails whilst our computers interact with each other, think up great things, and make the world a better place. Surely exchanging value over the internet will be instrumental in that, and along with identity and all the other benefits of crypto. It's in there. Why does Bitcoin seem to continuously beat these tech scenes? Because it seems to be a part of everything, or will be, or derivatives thereof. The crypto space is not a bunch of baseball cards that we pass to each other with the hot potato. It's a network. And the people that don't get crypto don't get that it's a network. It's a live and vibrant network.
Now, I remember one of my favorite quotes was you explaining the network effect in the previous podcast. And that is still my favorite quote today. Talking about limited supply, right? And me being like a space geek, and people always talk about, oh my God, we're going to be mining gold and asteroids in the future, and the price of gold is going to bottom out. And is that realistic at all?
No, I think that's just nonsense. This idea that you can send rockets to space for small amounts of money and bring back ore, that's just crazy, isn't it? Certainly not in our lifetimes.
No, I don't think so either, but I keep seeing this sort of like theme, and oh my God, yes, there's all these $1 trillion worth of assets, platinum and gold and silver, and all these commodities.
Sure.
Yeah.
And they're at the bottom of the sea as well. A lot of them is protected. You wouldn't want people mining the seabed for the environmental destruction it would cause. But you're not going to materially increase the gold supply by any of these types of things. I think it's structurally hard to find, which is the point. But it's also very established. It's limited supply is not the only point. It's also the fact that it's established and it's known and there's an infrastructure around it. And I think people should accept the fact that the old world's important and the new world's important. You can't choose one. It's crazy to try and pick one. You've got to live in the old world, right? You've got to eat food and breathe air and be physical. We don't want to turn our bodies into an idea that's in cyberspace and say, let's not bother with this thing. It's a ridiculous idea. So we've got to embrace the old and the new. The real world is real and the virtual world is part of our progress. And I think Bold, Bitcoin and gold brings those two together in a very simple way. Coming back to clever and lazy, is cutting through all the stuff and just say, these are two ideas that won't go away. And so in both and blend them.
Nice. Another question as well is, like you mentioned, like the traditional world of gold, and like my mom's 70 something, almost 80, and then like Indian people of that generation, right, who grew up in South Africa just after like British rule was over, they're still huge believers in gold, right? But I'm starting to hear from my mom as, oh, her cousins who are in their 80s, yeah, I've got my gold. I want to buy some Bitcoin right now. Do you find like that more traditional, like big gold believers, right, are thinking about Bitcoin now or shifting more into Bitcoin?
We did have an order. I'm not going to mention the name, but we did have an order recently for the Bold product.
Nice.
And the age of the buyer was 99.
Okay, that answers that question.
We just thought that was fantastic. So that's quite a high benchmark to beat now, isn't it? So we're looking for centurions to come and look at Bold.
Okay. That's definitely a high benchmark to meet. Charlie, you said a lot of cool stuff again on this podcast, and we've allocated 30 minutes. I always like to leave the end of the show, just anything you want to add on today. We've talked about some really cool points. The article, the quote that you just mentioned, the full quote will be in today's show notes. As usual, ByteTree's links, your links, 21 Shares links will be in there as well. Anything that you want to end off today's podcast on?
Yeah, there's lots of things I do. I'm a crypto guy a little bit, and I'm a gold guy a little bit, but also I cover multi-asset universe, equities, bonds, commodities, whole. And we put out a lot of research, and on ByteTree.com, there's a free sign up, and we put out stuff on Bitcoin and gold. We put out stuff on gold in a note I do that's free called Atlas Pulse. Every Friday, we do a little roundup of what's going on in the world. Please join us, ByteTree.com, and let's carry on the conversation.
Nice. Yes. And I did see the latest Atlas Pulse as well as I was preparing for this. Do you still do your videos? Because I remember I watched a video of you like answering questions, and I feel like there hasn't been one in a while.
There hasn't been. We probably should do more of those. I just get so busy, and
I know, especially for you, it'd be hard to sort of fit that into your schedule being who you
well, I think it is, Craig. You've got to really, you do this, right? And you're really focused on it. You do a great job. You can't just be a part-time podcast video. You've got to really put a lot of time into it. And finding the guests is really difficult. Being a guest become a sort of asset, if you like. And you want to talk to this guy or that guy. That's I'm too busy. I do too many of these. So it's very hard to get great guests, and I haven't got time to find them. So you think, okay, let's focus on what we do best. So I just focus on the research, and I love being invited on other people's podcasts. Like trying to organize our own is massively time consuming. What I probably ought to do is just, what do you call it? A town hall, ask me anything type. I probably should do those.
That would be fun.
Yeah. But anyway, yeah, I probably should do more of that.
No, definitely. And yeah, I mean, another sort of props to your research as well is, again, as somebody who I used to be a teacher, and those like young kids affected my attention span, like everything that I've read on ByteTree as well is like nice, short, concise, cool graphics, like the Atlas Pulse, the May 17th version that I read, right, where it explains where gold is at, color coded as money for me, like literally and figuratively as well. So I appreciate it. Charlie, thank you for your time today. Hopefully we can do another one of these in a few months as more people get into bold, and then we'll catch up there.
Thank you for your time. That was really good.